The Customer Service tab manages all of the things for the defaults and settings for how the system processes entering orders through customer service. The next order number, when we save an order, this is the number that it will be. The next quote number, this is the next number used for a quote. Profit Center usage. When we create financial entries, the general ledger account numbers can be broken up into 3 segments. Go to the general ledger accounts. This system is set up for 3 segment account numbers. This is where you would actually define your account structure. The way we have it set, the main account may be up to 5 characters long. The Profit Center, which is the middle one, can only be 1 character long, and the Department, which is the third one, can be up to 5 characters long. The system formats all general ledger account numbers to what is set up in Global Settings, Default General Ledger Accounts. The general account number can be from 1 to 3 segments, and each segment can be up to 8 characters long. There's actually 2 different ways when booking sales from an accounting perspective. Imagine that you have, like you do, in account number 3110. Notice here that you have a sales account that is Sales Product Line B. Notice Sales Product Line B West has the same account number, but the Profit Center is different. The Profit Center number is the middle one. One is Profit Center 0, and the other is Profit Center 1. 0 means east, and 1 means west. 2 is north, and 3 is south. BirdDog provides 2 different ways to calculate the Profit Center. The first is by looking at data coming off the order. Typically, you would do it that way when you had 2 different sales groups, one managing east and one managing west. They were shipping out of the same locations, and you wanted to track which ones were selling the most. In that case, set the Profit Center usage to order, and the system would assign that Profit Center at the order level while the order was being placed. Choose 0 or 1, which Profit Center was going to get credit for the sale. The other and most common way to do it is by product category. If this is set to product category, then the system uses the product category location matrix to figure out which sales account, and it uses the entire account. Because this is currently set to product category, you would look at the item that you are selling, and you would look at the location from which you are shipping. The item has a product category. The location is the location. If you are shipping from the location AT, and the item has a product category of 1, then that determines the general ledger account assigned to that transaction. This is the product category location matrix because we are pivoting product category against location to figure what sales and cost of goods sold account to use. PO creation settings. When you are setting up an item in warehouse management, if an item is purchased, then it can be set to automatically create a purchased order. Go to the Logistics tab in Item Setup, and under Auto Create Purchase Order, select Automatic. If you have a custom ordered item, every time a custom orders this item, you want to place a PO and order one for them. However, you don't keep this item on hand. In that situation, you can have the system automatically create that purchase order, which is controlled at the item level. Once you create the purchase order, you need to determine the status of the purchase order. Unreleased means it needs someone to go look at it. This is helpful for custom items that need notes on them. Another option is to have it create released, which means it needs someone to print it and it's ready to go. If it is a standard item, then released would be the best option. Posting cost. Whenever you run the post process at the end of the day by going to Accounting, Process Orders, Orders to Post, each of those orders to post will have one or more lines on the order line. Those lines will have an item number, location, and cost on the line. The question is, do you use the cost on the line that was probably used when the order was created, or do you use the actual? In order to understand that, we'll look at a scenario. Imagine that I'm selling widgets. I get a sale order for a widget. Let's say my system is set up to average cost. At the point that I place the order, it goes back into the item location for that widget. The average cost right now is $5. I take $5 off of the item location and put that on the order line. The sales price is $10 and the cost is $5 at the point that the order is placed. However, I actually don't have any, and it just so happens that $5 is what I paid for it last time. Now when the PO is placed, the price has gone up to $6 and I can't even ship it yet. Now it's a back-ordered item. The purchasing people run their reports and they figure out that we really need to buy it, and they go out and buy 100 widgets at $6. When they receive those in, the average cost goes up to $6. Now it is shipped and the customer gets it at a price of $10. However, the average cost when I placed the order on the line was $5. The cost when it was shipped is $6. When I post the invoice, which cost do I use? That depends on what is selected under posting code. If I'm a distribution company, I almost always say actual. It is rare for a company that sells tangible items for it to be anything other than actual. However, a company that sells intangible items might want to set it to line. If there are many factors to the price of an item and the price has to be manipulated per order, then it might be better to set this to line so that the cost can be edited on the line.